Wall Street exterior, tech company logos, and falling stock stickers. The posted strong profits, they beat Wall Street estimates, but instead of rallying, tech stocks styling. This week, giants like Microsoft, Alphabet, and Meta reported solid Q2 earnings, yet their shares dropped sharply. Why? It all comes down to guidance and investor expectations. Microsoft headquarters, cloud service, software interface. Let's start with Microsoft. The company delivered another strong quarter, revenue up 10% to $66.9 billion. Net income $21.9 billion. Cloud business Azure grew 18%. But Microsoft forecast for the next quarter fell short of analyst projections, especially in enterprise software and hardware. Market analysts say that investors are pricing in perfection, so even slight of caution from a company like Microsoft can trigger a sell-off. Microsoft stock tickers falling 3% after earnings calls. Google Campus, YouTube clips, and AI demos. Alphabet, the parent of Google, also beat expectation. Revenue hit $84.5 billion. YouTube ad revenue grew 7% and cloud revenue climbed at 28%. But once again, it was not enough to wow the market. Executives struck a cautious tone about digital and spending at the pace of AI monetization. Tech reporters say that Alphabet is investing heavily in AI, but it's still unclear how and when that will translate into big profits. Alphabet shares dipped 4% in after-hours trading. Meta, Amazon, Nvidia logos market headlines. And it's not the Microsoft and Google across the board. Big tech is delivering strong Q2 result, but issuing muted or uncertainty outlooks for the second half of 2025. Many companies are warning of slower cloud spending, cautious enterprise budget, and longer sales cycles in AI and software markets. Economists say that the AI boom is real, but the market is ahead of the fundamentals. There's still a long road to monetization. Nasdaq Composite trading downward. Traders watching screens, economic reports, interest rate headlines. Complicating things further, macroeconomic concerns despite cooling inflation, business are still navigating. High interest rates, slower global growth in election year, certainly. So while tech firms are healthy, investors are shifting from growth to caution, taking profits and waiting for clearer signs of future strength. Financial analysts say that we are not in a tech bust, we are in a tech breather. AI conference, data centers, and robotic labs. And the AI revolution remains the long-term growth engine, but the short-term outlook is more measured. Companies are investing billions in infrastructure, chips, and R&D, but returns may take years to fully materialize. Investors are asking, when does innovation translate to earnings? Wall Street, Silicon Valley compasses long-term charts. So, while the fundamentals of big tech remain strong, markets are signaling that the era of automatic rallies may be over, at least for now. It's not a crash, it's a correction, a reset of expectation in a sector is that a still shaping the future but facing real present pressure in the present. Next tripping point, subscribe for the full earnings breakdowns and market updates.